The cash flow page, this is probably the most important page. This summarises the properties, your income expenses, and how that's going to affect your life over the next 3 years. So you'll see the first few lines shows income. This is your net monthly income after tax. Household expenses, this is all your bills added up. You're going out to the movies, the restaurants, etc. And so these figures need to be accurate. If you're not too sure where it's at, what I suggest is that you track your spending for a month. Not necessarily run a budget, right down to the nitty-gritty, but just track your spending, see where it's at, and get these figures accurate. Now, basic rules of budgeting: if your money coming in, pretend it's a little bit less than it is. Money that's going out, pretend it's a little bit more. That way you build in a bit of a buffer. The other planned expenses line, this is just a line where you can add information or for anything that's outside of your normal month-to-month budget. Holidays, we like to separate the holidays line separate. You may just have 1 or 2 big holidays a year. Work that out and break it down to a monthly figure. This is important because later on down the line, when you're pulling money from the portfolio, you generally get paid more in bulk rather than the monthly amounts that you're used to getting paid through a normal salary. Now, the repair and maintenance line under property cash flows, that's a figure that you can allow for potential repair and maintenance as it may come up. Now, realistically, that doesn't need to be in there because a lot of the properties you'll be doing will be new build. The figures under each individual property, this information has been transferred from the properties page. So what you'll see under November, based on the money that's coming in versus the money going out and the cost of the portfolio is costing £2,935 a month. That information is then transferred out over a full 3 years, and each month the calendar just shifts forward, if you like, so you're always seeing 3 years in advance. Now, on this page, it's essential that you keep the income and the household expenses information current and up to date. So if there's any changes there, make sure you change those figures. Now, if I want to change those figures, again, make the change and refresh the spreadsheet to save the change. Now, if you want to change a figure and transfer it out over the full 3 years, make a change on the tab next door, type the word copy, refresh the spreadsheet, and this will send that information all the way across that full 3 years. Now, the next important function on this page is the show control panel. In here, this is where you set your tolerance levels. Under cash flow results, you can change the levels of risk, if you like. Under funds remaining, I want to be made aware if the funds are anything below £25,000 or if it's within 2 years of cash flow. So if it goes within those figures, an email reminder will be sent to you, as it will to me. And I'll get on the phone and say, hey, what's going on? In here you set your available capital settings also. So this is where we break it down into the cash that you have available in account now, equity that you have available in your drawdown facility, and also equity available on refinance if you choose to go and get more money. So you break those 3 figures down, apply the information, and then click OK, and it will take you back to the cash flow page. So what you'll see in summary is if you look at November 2008, based on my earnings, the money that I spend, and the provision for what my portfolio costs me, as in the actual costs as well, you'll see that I have the shortfall of £2,935 per month. Now, line 19 shows remaining funds. So this is based on the cash that I have available minus the costs of holding my portfolio for that month. Line 20 shows, based on the cash that I have available, the equity that I have available through my drawdown facility minus the monthly amount. And the third line is my cash available, the equity I have available on drawdown, and the equity I have available if I chose to go and to refinance to pull money out. So you can see, looking at this example, based on cash alone, I'd be safe until December 2009. Based on cash and equity that I have in my facility, 3 years out I'd still have £48,000 in my account. And based on my cash, my available equity, plus equity that I could get on refinance, I'd still have £58,000 in my account. So you can see that straight away. It gives you a visual of if your portfolio is at risk. Now, obviously, If the lines are all red and negative figures, time to give your portfolio manager a call.